What is up, guys? It is the accountant, and we're going to do one way to audit accounts payable. In short, specifically your invoice selections. First off, we need the year end under audit, usually 12/31, AP aging. We need the subsequent AP aging, meaning 1/1 of year 2 to the date of the audit. And we need a subsequent check register, 1/1 year 2 to the date of the audit. That's the range. What we're testing here with the year-end AP selections is we're saying, hey, was this paid or was it not paid? If it was paid, well, then we should see it on the subsequent check register. If it was not paid, we should see it on the subsequent aging. Now, these are items that are over a materiality threshold. You're not auditing every single item. So if the materiality threshold is 20,000, you're only looking at invoices over 20,000 or equal to 20,000. If it's paid, you should see that on the check register. If it's not paid, you should see it on the subsequent aging. Now, on the subsequent aging, we're going to make our invoice selections based off of the materiality. The subsequent aging, what we're trying to find out is, are there any invoices that were missed? For specifically, were there year-end invoices that were entered in after year-end? And are they on the aging? If they are, we got to reclass it back to AP. We got to put it back in AP because they have a liability. We're trying to uncover liabilities. So if they had an invoice dated 12/31 of this year and it didn't get put in until the subsequent year, you got to backdate it. The subsequent check register, well, we're kind of looking at the same thing. We're kind of doing the same test there. The only difference here is that we're assuming that from 1/1 to the date of the audit, something could have been entered and paid. And we would totally not see it on the subsequent AP aging because it would go on and off. So that's why we look at the subsequent check register. We want to see what was paid between 1/1 and the date of the audit. Because if there's any invoices over the threshold that need to go back on the liabilities, we need to find those. So really, like I said, this is all in short. We're really answering these three things on the invoices. If the invoice was paid, it should be off the the new subsequent aging, and it should be on the check register. If it was not paid, well, we should still see it on the current aging, because if it doesn't get paid, it doesn't go anywhere, right? And we should see it on the subsequent aging. If paid after year end, our question is, was it properly included or was it properly excluded? Excluded meaning this is an invoice for the new year, not the year under audit. So it is properly excluded. Properly included means it was paid after year end, but it shows up on the year end AP aging. So it was properly included. I hope this helps. And like I said, how to perform accounts payable audit in short.